Hey everybody, Rob Maurer here, and today we are going to be taking a look at a new auto industry report out of California. Some interesting information in there that may surprise a few people. We've also got updated insured vehicle numbers for Tesla in China, some news on Hertz, and a new EV ad from GM. Kind of a strange day in the markets today, but Tesla did end up finishing in the green, up 1% on the day, closing at $196.81, though still underperforming the NASDAQ, which was up 1.9% on the day. As I mentioned yesterday, Fed Chairman Jerome Powell did participate in an interview today that was around noon, and there was certainly a little bit more volatility around that time as he was speaking. I did watch it, and although there was some volatility, I didn't find anything too noteworthy if you've been listening to Powell speak at all, kind of just reiterating a lot of things that he has already mentioned. Also, like we had talked about yesterday, Ron Barron did end up appearing on CNBC this morning. He did discuss Tesla, although relatively briefly, and similarly here, nothing too major if you've heard Barron talk about Tesla before. He did highlight the safety of Tesla vehicles, mentioned the 250-foot cliff crash that we have talked plenty about, and he also shared an anecdote about a meeting that he had with Toyota, and their takeaway from the meeting was that they just really couldn't see any vision from Toyota. I think Barron mentioned that his son coming out of the meeting said that that was the most bullish he's felt about Tesla in a long time. So nice to see our thoughts are aligned on that, as Barron tends to get a little bit more access. Also, probably worth mentioning, CNBC did put out a tweet that said Barron could see Tesla stock price increasing to $15,000 per share by 2030. Barron actually said $1,500, not $15,000, so that is just a mistake on CNBC's part if you did happen to see that. All right, let's get into the auto report from California. This is the vehicle registration data for 2022, the entire year, as well as for the fourth quarter. We'll start off high level and then get into more of the Tesla specifics, but in 2022, California saw vehicle registrations decline 10% year over year. That was a little bit worse than total US vehicle registrations, which this report lists as down 8% year over year. You may also notice here that they break up the market into two segments, car and light truck. They've got car down 16%, truck down 7%. For the purposes of this report though, light trucks do include vehicles like SUVs. So overall market in California down 10%, but a great year for electric vehicles, going from about 9% market share, a little bit over 9% market share in 2021 to now about 17% market share in 2022. So almost doubling year over year in market share, and obviously the biggest increase in market share that EVs have ever had in California. And that is just electric vehicles. Plug-in hybrids were only about 3% market share and actually down year over year. So unsurprisingly, we're not to the maybe surprising part yet, unsurprisingly, Tesla leading the charge here in terms of EV market share, growing share from 6.5% of the total market in 2021 to 11.2% in 2022. Despite some pretty heavy growth from other EVs, Tesla's still at about 65% of EV market share, not a metric I like to look at a whole lot, but interesting to point out, especially in California, as that's probably an area where there is a lot of effort from other brands to ship and market their EVs first. If we exclude Tesla as a part of EV market share, then non-Tesla EVs in 2021 would have had about 3% of the total market and about 5.9% in 2022. So it gives another sense of how big of a contributor Tesla is, and also a gauge for how quickly growth is happening for non-Tesla EVs. Anyway, focusing in more specifically on Tesla's registrations in California increased 54% in 2022. The best performance for any brand in California by a wide margin. Genesis coming in second, 26% increase year over year. Cadillac, Mercedes, and Kia, the only other brands to grow, only 2 to 4% on those guys. And then every other brand in the red, with Lincoln being the median of the 25 brands that declined here at down 16%. Not only did Tesla see the most growth in 2022, they also were responsible for delivering the top 2 selling vehicles in California for the entire year, not just EVs, any light passenger vehicle at all. About 79,000 Model 3s registered on the year, about 87,000 Model Ys. So not only did the Model 3 and the Model Y, like we had mentioned in previous quarters, outsell vehicles like the Toyota Camry, RAV4, Corolla, over the course of the year, the Model 3 and Model Y combined outsold the combination of those 3 vehicles. It's a very impressive result, and it also highlights how much room for growth there is for Tesla outside of California. As we said, about 11.2% market share in California, only 3.5% market share in the total US. Now, obviously those numbers are never going to be identical, but they should come closer than that over time. Interestingly though, we kind of saw the opposite of that in 2022. If we look at 2021 numbers, there were 121,000 Tesla vehicles registered in California during the year, of Tesla's 936,000 deliveries, it's about 12.9% of total in California. However, for 2022, we've got 186,700 of Tesla's 1,314,000 deliveries. That's about 14.2% in California. So that's where I think things start to get a little bit more surprising. I don't think that people would guess that, especially given the storylines that we've had throughout 2022 around Tesla's brand and possible degradation, particularly among Democrats, which obviously skews heavier in California. So as we saw with the market share numbers for Tesla versus the rest of the US, not only is California starting off from a higher base in terms of Tesla's market share, which makes it more difficult to grow as quickly compared to other areas which are starting off from lower bases, which would be pretty much everywhere else, you've also got what appears to have been some brand headwinds throughout the year that, if those were to have an impact, would probably over-index in terms of their impact in California. Yet despite those things, Tesla's growth in California during 2022 still outpacing other regions by an amount that is not insignificant. Again, I don't think this is what most people would have expected before seeing this data. Now, you might say, hey, Rob, this is a full year of data. You're talking about brand stuff. That was more in the second half of the year, particularly in the fourth quarter. That's a fair question, but again, you may be surprised if we look at how Tesla's vehicle registrations were split by quarter in California. Turns out Q4 was actually a record 53,000 vehicles from Tesla registered in the fourth quarter in California. It's 11% above the previous record from Q1, 48,000 vehicles there, and it's up 25% quarter over quarter from Q3. Worldwide deliveries were up 18% in Q4, so Tesla's share in California actually grew quarter over quarter to end the year. To be fair though, that put California's share of Tesla's deliveries in Q4 at 13% of the total, so a little bit lower than it was for the year on average. It was also probably easier for Tesla to make more deliveries in California at the end of the quarter after adding their $7,500 incentive in California than anywhere else. Still, I think in aggregate, putting all this information together, I think should be taken relatively positively, at least from the data that we have so far. It doesn't look like there was any huge hit, specifically in a more democratic market. Doesn't mean there hasn't been any impact at all. That's obviously very much up for debate still, but hopefully this can help at least diminish some of those concerns. All right, let's move on to another heavily focused on market for Tesla, and that would be China. We do have new weekly insured numbers. This is for the week of January 30th through February 5th. And there were 8,643 Tesla vehicles insured in China during the week. So this is up about 5,000 vehicles from the week prior, which of course was heavily impacted by the Chinese New Year. With production just restarting towards the tail end of that preceding week, that'll probably still affect things for this week as well. And we still don't know what Tesla is doing in terms of the export versus domestic allocation for Giga Shanghai production at the moment. If we do see really strong weekly insured numbers here, that'd probably be a really good sign for Tesla demand in China, but otherwise, it's just not quite enough information for us to take much away from at this point in time. In addition to just having restarted production, allocation, and things like that, there is still probably a lingering impact of just the Chinese economy in general from the Chinese New Year. See an EV post highlighting that many people in China extend the holiday to the 15th day of the first month of the lunar calendar, which fell on February 5th this year, so part of this data set. So even if Tesla producing vehicles, you may have other people that just aren't taking delivery during this week. Looking at BYD insured numbers, they still seem to be affected during this week as well. They had 24,000 plug-in hybrids and EVs insured during the week, which matches up to 2 weeks ago. Similar to Tesla, Tesla was a little higher than 2 weeks ago, but both still below some of the earlier peaks. So we'll continue to keep an eye on it, but again, a little bit limited in terms of what we can take away from that data at the moment. Next, we've got a couple of updates on Hertz, which reported earnings today ahead of expectations and shared some comments on electrification of their fleet, including Tesla. In one of their filings, as picked up by Bloomberg today, Hertz disclosed that their rental fleet in the Americas reached 429,000 vehicles roughly, and that about 11% of that were Tesla vehicles. So that implies about 47,000 Teslas for Hertz. Obviously, late in 2021, Hertz had announced the intent to purchase 100,000 Tesla vehicles. I can't recall if they gave an exact timeline on this, but this would imply that they either have changed their plans in terms of the number of vehicles to acquire, or they have not acquired all those that they intend to quite yet. The caveat, as some people have pointed out, is that this filing just disclosed the percent of the fleet for the Americas, and Hertz operates in 150 countries, so maybe the balance of vehicles are somewhere else, but my guess is that this is probably the majority of the Tesla fleet that Hertz operates. Looks like about 80% of their revenue comes from the United States. So if the ratio is the same for Tesla distribution, maybe there are 10,000 or so elsewhere, which would still leave them about 43,000 or so short. In general, Hertz has been very positive in terms of their commentary on electrification, in terms of their Tesla integration. So I would expect that this does continue. It's possible that as Tesla raised prices throughout the year, that just kind of priced Hertz out. Maybe they will look to start acquiring Teslas again with this price cut. They did say, as a part of their release today, quote, "We look to our investments in electrification and technology to yield increasing operating leverage and improved returns and an even better product to our customers around the world," end quote. So that should mean good things for further Tesla adoption from Hertz, we'll see, but I'm glad that all signs point to it being very successful for Hertz so far. All right, last item for today as we approach the Super Bowl for the NFL this weekend. General Motors, GM, has decided to release their Super Bowl commercial a little bit early, and as has been the case in some of their previous EV ads, it again features Will Ferrell, but kind of strangely this time around, it's presented in partnership with Netflix. So we talked a few episodes about that partnership between GM and Netflix to feature some GM vehicles in Netflix programming, and it looks like all the things that GM could think of to say about their electric vehicles, that partnership is the one that they chose to emphasize on probably the biggest television advertising stage of the year, at least in the US. I mean, I guess it's a little bit humorous if you do happen to watch those shows that are featured in the advertisement, but they literally don't talk about the cars. There's no specs, there's no pricing, there's nothing. It's literally just GM saying that they're going to put their cars in Netflix shows. That's it. So I don't know if Netflix is sharing in the ad budget for this, or if this is just part of the contract that they agreed to when getting these vehicles into these shows. Whatever is going on here, it's an interesting choice to say the least. I mean, you've got a product with electric vehicles that happen to be one of those rare products where an advertisement can actually serve the purpose of providing some helpful information to the audience. And instead of doing that, you're paying to specifically tell people that you are paying somebody else to put this product in front of their faces in the shows that they watch. If you want to have a good laugh, just think about somebody pitching this concept to Elon. It's like doubling down on anti-Elon mentality to the point where if you really boil down what they're doing, it kind of feels like something out of Idiocracy. So we'll see how that goes for GM, but hey, any publicity for EVs, hopefully good for Tesla too. As a reminder, last year after the Super Bowl, with all the advertisements for EVs, Tesla, with no advertising, saw a big spike in orders the following day. So we'll see if that happens again this year. We'll see if anybody takes any shots at Tesla or at Elon. I think Polestar did that last year. So it should be fun to see, but that'll wrap it up for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Wednesday, February 8th episode of Tesla Daily. Thank you.